Welcome back to another episode of the Meet Kevin Show. Today we have a special guest back again, Ross Gerber, who needs no introduction at this point, but an absolutely amazing financial advisor over at Gerber Kawasaki. Ticker symbol GK for their ETF. Learn more about Gerber Kawasaki at gerberkawasaki.com. But Ross Gerber is here. They've got over $2 billion in assets under management and can help you out with financial advice as well. Really excited to talk to them about the market today. Keep in mind, for myself, we've got a course coupon expiring at the end of this week, and super excited to have you there in the courses. For now, welcome aboard, Ross. Thank you so much for being here. How's it going, man? What's going on in this market?
Hey, well, we got rates going kind of berserk on the 10-year, right? I mean, if you're in real estate and you were thinking about buying a house this month and you didn't lock in your mortgage, boy, it's been a really bad month for you, right? So, mortgage, one of my clients is a mortgage broker. I talked to him yesterday. I said, how you doing? You holding up? He says, I've never had so little to do in my life. He's like, you hear my office? Wow. There's nothing happening. Well, it's like, there's no refinances, right? Like nobody's refinancing a loan. And then it's like purchases in LA have gone down substantially. Like there's very few purchases. So real estate picked up, in the first 6 months of the year. We had a bunch of clients buy houses and people were actively using these 6.5% mortgages. And I was feeling pretty bullish, but now we're looking at 7.5% mortgages, or 7%. And it will affect the markets. And so, growth stocks have been crushed. You've seen it on all the growth stocks. But it's relative to where we started the year. It's still been a good year, but I think relative to like August has just been sort of like a massacre. And it's just because of rates. There's no like change. And a lot of this has to do with the fact the economy is a lot stronger than anybody thought. And so the yield curve kind of flattened. So if the Fed actually just stopped raising rates, boy, all this could work itself out okay. But then we've got Neil Kashkari coming on going, I don't think we're done raising rates. And this is just constantly moving the cup away from investors. And in the same respect, now I'm worried that we're going to see more banks fail because with the 10-year going up to 4.3, what's happening to B of A's collateral right now?
I mean, that's a good point. I mean, that's what caused 4 banks to fail. And that was at 20 bips lower than this, high threes,
Right.
And then, treasuries fell down to like 3.3 for a moment there during the banking crisis because everybody had a heart attack. Now, all of a sudden, you're right. I mean, you're at 4.3, a whole percentage higher. It's insane.
So all this collateral, right? So B of A is probably the worst offender. They had $100 billion of unrealized losses on their books when it was at 375. Maybe 4. Now maybe it's $120 billion in losses on their books. And they don't realize any of these losses because of the kind of BS banking laws, right? And so now there's even more pressure on all these small banks. And the Fed's sort of like dancing through the minefield because nobody's exploded again yet. And yet they're like putting more mines out. Let's put more mines out there. And it's just a matter of time because we all know that if you're holding a 30-year treasury or a 10-year treasury right now, you're losing money. And that's a lot of banks.
Do you think that Neil Kashkari is right to say they should keep raising rates? Or I mean, I saw the Atlanta Fed Now real GDP forecast suggesting that we're at a 5.8% GDP annualized right now. That's how the market, like all the data they put together in this forecast, it's just their forecast. But they think we're sitting at 5.8% on GDP, which is actually greater than China's where China's supposed to be. They were supposed to be 5.5 this year. They'll be way less. If we're 5.8 right now, that just seems insane. Is this?
I don't think that number's right. I just don't think that number's right. I don't think we're growing at 5% right now. I think there's parts of the economy that are doing great, but there's parts of the economy that are garbage right now that are getting destroyed. And, a lot of that is interest rate related, right? So, when you can't sell a house, eventually this ripples through the economy, So, this is the whole thing I've been talking about a lot, that I think everybody seems to want to pretend like we all know it's out there. But it reminds me of the financial crisis where like we all knew like there was speculation going on. We just didn't know it was crazy, right? And then when everything went down, like in AIG's case, it was like, oh, hello, we have like 4,000 derivative contracts that are down like $10 billion and we're bankrupt. And what I'm worried about here is that every loan that has been given over the last 15 years is underwater. Every loan, so that they haven't matured yet. And they're all underwater. And the banks are hiding these losses through the accounting rules that don't require them to take those losses in real time because they're holding them to maturity. But maturity might be 10 years from now. So these are real losses today that won't be alleviated for 10 more years. Okay. But if people start taking their money out of the bank, there's nothing they can do. They're going to have to sell the collateral at the loss. So one of the first things America has to do to clean up this mess is to make all banks realize all losses in real time, like investment firms do. Every other company does. Berkshire Hathaway does. So if you're a non-financial, you have to report gains and losses on your portfolio with your earnings.
So you think there could still be another banking crisis actually ahead of us, almost
We're
like
looking
to
at
an AIG level?
We're looking at it right now.
Wow.
B of A. It's B of A. And we get a call, and all of a sudden the guys at B of A crack, and people start taking money out of B of A, right? And they got 125 billion of bad loans. It's like 60% of their equity, supposed equity. Okay. Then like B of A is in trouble. Then where do I put my money? And then money starts moving all over the place. And now we have the full-blown financial crisis where the Fed's going to have to step in and say, we got to make B of A solvent again. We got to make all these other people solvent again. We got to give money to all the banks again. And we're back in financial crisis 101. And we actually know the playbook because we've done it before. But the Fed forcing these rates higher and higher and higher when inflation has been broken is putting a lot of risk in a system that doesn't need it. It doesn't actually.
A lot of people think that inflation is going to pop back up again, and that the Fed has to stay, higher for longer to really keep it down. Are they just way overdoing it, and as a result, they're going to cause these failures?
I just don't think they're reading the news. I mean, look at China. I mean, how is inflation going to take off when China is in a horrible recession right now and looks like they're in real trouble? I mean, Europe isn't like some booming economy. I mean, we have deflation all over the globe except here. And to think that we're some island among a sea of deflation that'll somehow have this spurt of inflation with 5.5% short rates and 4.3 long rates, that's a fantasy. What we all need to be worried about is the other problem, that they're going to kill this golden goose. For the first time since the 90s, since I was a kid, we have real wage growth above inflation, where the average American has a good job that they're getting raises. The average guy is actually getting ahead right now, and they're out spending this money, while the wealthy and the higher income people, they've seen the layoffs, they've seen the reductions in pay, they've seen the discipline and financial discipline. That's all on mid and high level management. Okay. When you see layoffs today, they're saying we're laying off in our corporate headquarters. They're not laying off in the factories. Okay. And so what we're seeing is an economy that's quite good, actually. And if the Fed goes away and just lets things be, we're going to slowly tick down economically, like the activity will tick down. And then they have this optionality to lower rates into next year and support the economy just as it gets weak. And so if they just play their cards right here, they can come off as heroes, but they've just continued to do this wrong for 2 years now, waiting too long, letting inflation go crazy, then jacking up rates on us to just slam the brakes, causing a huge shock in the economy. Then the shock's absorbed and we're still going, and they want to just keep kicking us until they just kill it. Just kill the gold.
Do you think that's what they'll do? They'll just keep going until Bank of America actually fails? I mean, isn't it too big to fail? It's one of the big fours.
At some point, Biden's going to have to tell them to stop. It's like, I'm running for president.
You think it's on Biden who's going to have
Well,
to
he's
put
running for
pressure on the
president.
Fed.
Okay, Biden has 100% chance of winning right now if the economy isn't in a recession. Because if Trump is the nominee for the Republicans, they can't win. Because Republicans,
if the economy is doing well,
because Republicans don't want to really vote for Trump. Only Trumpers want to vote for Trump. Okay, but I just spent a month in Orange County, and I'm friends with lots of Republicans. Okay, I walk both lines. Okay, there are many Republicans that don't like Biden, and I totally get that, but they will not vote for Trump. And so what's going to happen is they're just not going to vote. Okay, and the Republicans like Kevin McCarthy are misplaying their hand by backing Trump. What they're doing is they're hurting their opportunity to run somebody that could win. Maybe it's Christie. It's not going to be DeSantis. And so Biden gets up and says, I don't need a banking crisis and a recession in an election year. You need to go away. And that's why I think the Fed is not going to be raising rates in September. I think they're done. I think the next move is lower. And I think we're going to see that at some point early next year or in the middle of next year. And I think that they'll support the economy through the election. And I think we have a good enough economy that it'll last and potentially be really good over the next 3-5 years if they manage this right.
There are a lot of people who say there's this debt bubble needs to be solved, though, at some point, that these unrealized losses at the banks need to be solved, although those should lower if yields go down, but that you also have a lot of corporate debt that you kind of need to see these companies implode. Or are we at a level of debt where we kind of need a great reset, so to speak?
Yeah, I'm not seeing a lot of corporate stress from the sense of you can see it in the BDC market, which are higher risk corporate loans. We're not seeing defaults. We're just not seeing a lot of failures and bankruptcies yet. And I think the startups are the ones suffering the most, the ones that need capital but don't have debt because they're just startups, so they need equity. So when you look out into the debt market today, believe it or not, corporations have lower yields than the government. So Apple yields on a 6-month bond is lower than a treasury yield because the treasury is holding rates higher than even the market wants it to be. So the market has no confidence that rates are going to stay higher.
Yeah, I mean, it feels weird. This implies everybody's selling these bonds, these 10-year bonds and 2-year bonds and whatever at these yields. Why shouldn't people be eating these yields up? I mean, it implies that there's this fear that inflation will stay around forever.
Right. But if you own a 10-year at 3.6 and you can buy a 1-year 5.5, why would you buy a 10-year? Right. Because if the perception is the Fed's going to lower rates pretty soon, I want to lock in rates longer. Right.
Yeah.
So because we have an inverted yield curve, I have to find, it's kind of what I do with the house hack account. What's the best bond in this curve? Because it goes down. So the shorter the bond, when you say, Ross, buy me a 3-month bond, well, we get higher yields. If you say, Ross, buy me a 1-year bond, it's a lower yield. Okay. Yeah. And if you say 2-year bond, it's a lower yield. And if it's a 10-year bond, it's an even lower yield. And so the perception is, well, they're going to lower rates pretty quickly. So I want to lock in something down the curve. But when the perception is we're going to hold rates higher for longer, why would I hold a 3.6 10-year when I could buy a 5.5, 1-year and just keep rolling it over? I'll make more money. So I sell my 10-year and I buy my 1-year. And that's what we're seeing. And that's the inversion now, right? Flattening a little bit. So the 10-year moves up. So if the Fed now moves down, we can get back to an even yield curve. That's what we really need for stocks to go up. So ladies and gentlemen, on the Meet Kevin show, if you really want to know what will be the catalyst, where we will finally have the confidence in the U.S. economy is when the yield curve is done being inverted. Okay. And that will only happen when the Fed lowers rates. So now the 10-year and the 2-year and everybody's moving up on the curve because the Fed's saying higher for longer, blah, blah, blah. Okay. But then next year the Fed can lower. Then we've got a flat and then ultimately a regular yield curve. And then stock market goes through the roof. We're back in the bull market we're in the bull market now, but we're just in phase 1 of the bull market. Now we're in this corrective period of time, which could last several months until we get some clarity about what the hell the Fed's going to do. So the problem is
think it's
changing it. No, that's
yeah. Okay. Do you think they are purposefully trying to put on this facade of, hey, we're going to keep everything higher for longer because they know that when they cut, they could just cut 1% tomorrow if they wanted to. So why not just keep that facade on, that mask on, so to
Mhm.
speak, like as if they know inflation's already gone, they know it's not going to come back, whatever. Just keep the mask on until they're ready to, and then they cut instantly. Do you think that's what they're trying to do, or what are they
I
up
don't think
to?
they're trying to do that. I think that's what they're
Mhm.
doing because they've been
Okay.
talking. They had to talk up rates because they didn't act quick enough. So they talked
Mm.
up rates last year quickly, and then they caught up to what they were saying. And they're still talking up rates, even though we all know they're done. Because if the person, if Kashkari came out and said, "Look, inflation data is clearly within our range right now," and if you look at the last 12 months, we're at 3.2%, and that's with the bogus shelter number, and you look at the shelter number at 0, now we're at 2.2%. And so we're
Yeah.
actually in a pretty good place, and the economy is still growing, and wages are still good. So this is actually ideal, and we've done a great job. Thank you very much. If Neil said that, the stock market would go up, and people start spending money, and then maybe inflation comes back. So, they're so concerned of being, the Volcker of our generation that they want to just destroy inflation because they look back at 1983 and they see the bull
Mhm.
market and what happens when you kill inflation, but they're forgetting what happened in the 70s, which
Right.
has no relevance to where we are today. Okay. When you had the Nixon 70s and the getting off the gold standard and rampant inflation, they had to do that because we got off the gold standard. But when
Right.
you look at where we are today, this is not a similar period, but they're acting the same way. And obviously, the big risk is that they overdo it. And the Fed has overdone it almost every time. And they accidentally got a stronger economy than they had bargained for. And they seem to not be happy declaring success, and they still want to destroy the economy. And it's really anti-American. It's really anti-capitalism. And it's really a byproduct of the Biden administration's anti-capitalistic approach to business, which, I despise personally, whether it's Linda Khan at the FTC trying to block everything possible to the Fed working so hard against small business owners, against people who want to start their companies. Like small business owners are getting crushed right now. People want to buy a home for their children are getting crushed right now. And the Fed, it's just numbers to them. They say, oh, well, what about wage? What about core inflation? What core inflation is wages. And what he's saying is that if you're a waitress and you're all of a sudden finally making more money, well, that's bad. And I want to take that away from you. That the Fed just won't say that. They are the creators and defenders of wealth inequality. And that's
Mm.
what this is all about. This is all about stopping the average American from gaining wages during this period of time. We're seeing it with the unions. We're seeing it. Everybody wants a raise. The UPS guys got a raise. Even the actors want a raise after the best years in Hollywood history. Okay. It's not good enough. We're going on strike. We need more money. So labor finally is getting paid. And the Fed saying, we can't have this. We can't have this at all.
So do you think the wealth gap will actually expand? Rich will get richer again, that the people who can buy
Absolutely.
assets now, stocks and real estate, are actually people who are going to benefit once again when the Fed lowers rates. And then once again, the rich get richer and the people who wanted to get in can't because now prices are higher again.
You're literally wearing a house hack like hoodie or sweater or whatever you want to call it during this speech. This is exactly what happened in the financial crisis. Is people like us buy up all the houses cheap because we don't need a mortgage. And then the people who need a mortgage can't buy the house because investors buy them. Okay. And so any deal you're going to buy. In fact, you're flying around on the PP plane all day long looking for deals where the average American is like, I'm looking at a 7% mortgage. I can't afford the house. And you're like, I'll pay cash. I'll fix it up and I'll rent it to you. Okay.
Yeah.
And owning a primary residence is one of the most important ways for people to build wealth. So with the, like LA, 67% of people rent, and that's why they can't build wealth. But the value of real estate in LA has gone up consistently for the last 50 years. So, when you think about real estate, other markets might be different, but like in markets that are in high demand, like LA, it's like you want to own a home if you want to stay here, And so it's really sad what the Fed's doing, because the average American is finally getting ahead post-pandemic. The rich did get richer during the pandemic. All of us tech-enabled, companies did great, and people in the services industries got destroyed. And now they're finally making wages. Now they're saying, pay me for the work I did in the factory during COVID and kept everything going. And they're getting paid. And the Fed's saying, we can't have this. And so investors buy up their houses and rent them back to them because they don't need a mortgage.
What do you think about someone like Larry Summers making this counter argument that interest rates will stay higher for years, that we might see the 10-year peak out at 4.75 and stay there for years, which would likely introduce 8 to 9% mortgages and actually even more pain before less pain?
I mean, I think from an older generation, that is a real thing, because they had those mortgage rates. I think being my age, I saw some of that as a young person, but most of my life I've been in a low interest rate world. What I think is different now is that because we are an aging population across all industrialized economies, growth is just naturally slower than it was 30 years ago or 40 years ago. And so because our demo is basically old people, I don't know if you walk around, but you walk around your neighborhood, like in California, it's like everybody's old, or they're like young families. It's like I just moved to this new neighborhood while I'm redoing my house, and it's like everybody's super old or like young families. But to move into that neighborhood, it's super expensive. So these are like successful young families, but like the old people have all these old teardowns basically, and I'm like, boy, these people have $4 million houses. They don't even know it. And they don't have any money. You know what I mean? And it's just because they've been there forever and they're not selling. It's like grandma's not selling even for 4 mil, even though she has no money. It's like, it's kind of crazy, So, we need to create an environment where people who want to start families and have kids can buy a home in a city, and that environment doesn't exist any longer. It's really sad.
And you think ultimately that's to blame on the Federal Reserve, that they've accomplished their inflation goal, just get back to normal now and lower rates.
And I would also blame governments in the cities that have created so many rules to build anything that builders and construction is really hard. Like when you talk about adding supply of homes, good luck. Good luck getting permits. This. I mean, that's just one of the reasons I told you when we first met. I go, I hate real estate. It's a nightmare. And now I'm doing it. And I'm doing it with some good people, so it's less of a nightmare than I had hoped. I thought it would be a much bigger nightmare. But that said, I went around the permitting process by not tearing down my house completely. We just kept the structure, because he was like, if we get permits, it's like a year plus of this and like way more cost. And I was like, dude, I don't want to do this for the next 3 years of my life. He's like, well, without the permits, we can do it in 3 months. And I was like, okay, done. So my house isn't getting any bigger, but that's fine. I don't like, how big does your house have to be? I mean, there's this new thing among wealthy people that they think they need to have mini hotels. Like in my neighborhood, we have a bunch of mini hotels now, and it's just absurd. People have lost their minds. So if you want to see wealth inequality, my God, it's like absurd what's happened in this town. Oh,
it's funny.
I'm not rich enough. I need a mini hotel.
We have more children coming. We have twins coming, and
you do?
In November we've got twins coming, and then maybe some more after that.
Dude, you took Elon's thing way too to heart, huh?
Yeah, but the first thing everybody asks us is, hey, when are you moving into a bigger house? And we've got 2,300 square feet here, which is like,
I don't know how you do it.
Of people we're gonna have here, not that great, but we're like, it's plenty of room for us. we like it. We could never do like a 10,000 square foot home.
No, our current house that we're renting is 2,500 square feet, which is the smallest house my 4-person family has ever lived in. And it's been fine. It's been fine. But the bathrooms are smaller. It's smaller, but it's fine. There's no reason why a family of 4 can't live in a 2,500 square foot house. It's fine. And our house, our regular house is more like 3,300 square feet. So it's nice. It's fine. It's big enough. But do I need a massive home theater for 20 people? No, I don't. I have 5 people over. I'm happy. I don't want 20 people.
There's AMC for that.
Right. Well, you can rent the theater down the street, actually. In the Palisades, they have a high-end theater you can just rent and have 20 of your friends come for $500 or whatever.
Wow.
Dude, they're
Okay, wow.
doing weird shit now. You can rent a spot at the beach now. You know, I found this new company. You can pay $500. They come down to Will Rogers Beach and set up a whole lunch for you and your family, just like the beach club, but it's portable now. You don't have to actually join a beach club. I'm not a member of country clubs. Country clubs aren't really my thing. You know, there's the beach clubs and the golf clubs, and in LA, that's kind of a big thing. I don't like these things. So I'm not a member, you know, of clubs.
I'm surprised because I've always taken you as like a very social person.
Well, I go to clubs, I mean, with my clients and stuff who want to do that stuff, but I hang out with like hippies, you know, like I like to hang out at like music. I like to hang out I was just in Topanga Canyon talking about what a cool place of LA, you know. It's like,
so what about this retracement that we've had since July 19th? That was ironically, maybe unironically, the day Tesla had earnings. Everything's been straight down since then. I think we're at nearly, 25 out of 30 days that are red. Well, not exactly, because we're not that many days yet, but that's the trend we're on basically. And it's just like you said, all growth getting decimated since earnings started coming out. Did people overinflate AI expectations and hype of how good earnings were supposed to be, or what is causing this? Or is this just a little bit of a give back after a great year so far?
Well, there's Tesla, and then there's like other companies. So NVIDIA reports, I think, next week. So we'll see how they report. And I'm expecting pretty good numbers, actually. I don't know what the expectations are, blah, blah, blah. But for me, I expect good numbers from NVIDIA and growth in earnings. I thought earnings season was good. Our companies did well this earnings season. I didn't have really any disappointment in the numbers. But all the stocks went down, after they reported good earnings. And then like the stocks that reported bad earnings, the stock rallied. Like Disney reports a bad number and it rallied, and I was like, well, for 2 days, but I was like, you're better off reporting a bad number than like killing your numbers because you got sold off. But so stuff rallied into earnings and then sold off. But Tesla's its own issue, because what happened with Tesla over the last couple of weeks has been distressing. The biggest issue was, first they released earnings and, it was sort of like, oh, we beat earnings, but not really, it was sort of a questionable beat. And then it was sort of like, well, we're not expanding deliveries because obviously they don't need to make more cars because they're not selling all the cars they have. And then it's like, oh, we're lowering car prices again. And then it was like, oh, and Zach Kirkhorn's leaving. And I was kind of crushed. Like, I've been working so hard to get a succession plan for Tesla. Like that was like one of my things. That's why I ran for the board. Like, Elon's got 5 other projects. What happens if he dies? Like he wants to fight other men in a cage, like what happens? And Zach Kirkhorn was the guy. And he wasn't the most exciting personality, but he was a winner. This guy was a winner. And when he got promoted, when he became CFO at that time, there was a lot of consternation about it because the guy who left had been there a long time. And they did this on a conference call, like in 2018, I think it was, or something. And it was just like the worst time for Tesla. And it was just super hard time. And Zach came in the hardest time for Tesla and like held the thing together, and he was a kid. He's still a kid. And he did a great job. He deserved every dollar he's made. And he worked for Elon in an extremely stressful time. And it's just like nonstop. So you got Drew and you've got Zach and you've got Tom Zhu. And they go out in Investor Day and they say, these are all our leaders. We're going to add these guys to the board. Here's our leadership team. If Elon gets hit by a truck, we got 12 great guys. Here are all our 12 great guys. And then I was with a group of analyst guys, including Gary, and we're like, well, who would really be in charge? And I go, Elon found 12 people who don't really want to be in charge, but love working for Elon. So I was like, probably Zach. So in my mind, he was like the heir apparent if something happened to Elon. And I would feel pretty confident with Tesla being run by Zach and the team. And now
so you think Zuck could kill Musk accidentally, and now the next best guy is also gone, and that's why the stock is tanking?
pretty much. But now Elon's not going to be fighting in the cage match, it turns out, and has a bad back, which we all knew, which is the silliest part of this whole embarrassment. And then he lost his best
You don't
guy.
think it's going to happen? Because it seems like
I thought they
just
announced
bickering
that it wasn't
about
going to happen. I thought they said it wasn't going to happen.
You know, it's been all this bickering of, you know, Zuck sort of, oh, we should just call it off if you're not going to commit. And Musk is like, let me come over your house. And,
Yeah, I saw
and we'll
all that,
tussle in your backyard, you know, and do like a trial run. And Zuck's like, nah, let's do the real thing, you know, in the Octagon in Vegas. And Musk is like, nah, we'll do it in Italy. Who knows what the hell is going on?
I thought that, first of all, Elon has a bad back.
Yeah.
Okay. This is not news. The guy is in pain every day. You know, it's one of my concerns about him is that he actually lives in pain with a bad back and does no physical exercise, doesn't work out, doesn't do cardio. He's well overweight. I don't know why he thinks he has any business fighting anybody or doing anything physically active at all, to be honest. Like, he should just get in shape for all of our sake, right? But this whole fight thing is nonsense, and he's not going to have a fight because he's going to hurt his back. You know, I wrestle with my 11-year-old. I have no pain. I'm quite strong, and I'm worried he's going to hurt me. I'm 52. I'm not 30. I'm not, you know, you can wrestle around with your 11-year-old and your 7 other kids, and you're 30, and you'll bounce right back. But when you're 52 and you get a bad wrestle with your kid, your neck's going to hurt for 6 weeks. You know what I mean? So you don't do this stuff. Listen, it's the secret to being old and being happy is accepting what you should and shouldn't be doing. But when you try to live a life that you've lived in the past but is over, it's not a good thing. You know, they call it midlife crisis, like when you try to like relive when you're young and do all these crazy things. And yeah, you hurt your back. So that's what it is. Musk's having a crisis. He wants to fight the young kid. It'd be like me fighting you, you know? It'd be like, I'm going to fight me, Kevin. I'm bigger and stronger than me, Kevin. I'll take me, Kevin. But I'm 52. You're scrappy, you know? Like, I don't know. More likely I might win, but I'll get hurt. You know? I don't know. He's supposed to run like the 5 companies he's running. So I don't think there's anything worse for the stock than him talking about cage matches. You're talking to institutional fund managers. You know, I'm probably the craziest like institutional investor in America. You know,
What about Gordon?
Gordon's not an institutional investor.
Oh, okay.
Gordon's an analyst, isn't he? We don't even know who he works for.
Oh.
GLG. Like, we don't know anything about Gordon. Like you went to his house. Did you learn anything? I mean, do you know?
It's his own company. He does,
right, but who pays
he sells his own research.
Who
Yeah.
to who? To whom?
I don't know.
We don't know. We don't know where Gordon's money comes from, but he has a house. He pays the bill somehow.
What do you think about some of the latest commentary from Gordo that, hey, look, margins might never recover for Tesla? Do you think that's the wrong way to look at it? Or is this just you kind of buy the dip and wait for rates to come down and margins skyrocket right back to 30%?
So Tesla, like, oh God, they have so many unique problems to Tesla. It's they almost like miraculously come up with new problems, you know? So there's many philosophies to business. You know, you're in YouTube or entertainment and business and real estate. And so like when you run your kind of business, it's very asset light, you know, other than real estate, but like, you know, so you can look at your cash flows and your revenues and, you know, it's pretty high margin, you know? So like being a YouTuber is a very high margin business and you have a plane, you know, so you try to hurt your margins just for tax reasons. You know what I mean? It's like that's basically what you're doing, right? It's like you purposely hurt your margins for tax reasons, right? As you run a new offer for the next thing, because it's just high margin. It's a smart business. You're a really smart business person. And when you're in a lot of industries that are, let's say, manufacturing or product based, there are many different factors you have to consider in pricing your product. But one of the things that most companies do, especially companies like Apple or companies, I follow a lot of companies, let's say in consumer products, where you set a margin. You know what the margin needs to be profitable. And like, you know what that margin is. So let's say that margin is, in Tesla's case, 20%. We want the cars to have a 20% margin, and you price them accordingly. So you take your costs, you add the 20%, you say that's the cost of the car. So if you're lowering prices, you're not lowering margins. Mm-hmm. So you just say to the marketplace, we're passing on cost efficiency as we grow by lowering prices, but we're going to defend the 20% margin. If they said that, the stock would just come right back up. Okay. But what happens is every time there's an article that they lower prices by 10 cents in China, people like me and everybody else is like, this isn't good. It means they're not selling as many cars, because Elon basically said, we price our cars with a dynamic pricing model. I look at how many cars we sold and how many we made, and then like I price it accordingly. And knowing that they're doing dynamic pricing actually hurts Tesla, because it means consumers have more incentive to wait to buy a cheaper Tesla than to buy one today, thinking it might go up in price. Because what we all know is that they're only going to go down in price at this point. So if somebody says, oh, should I buy a Tesla today or should I buy it in 2 months? You'd say, well, why don't you wait 2 months? It might be cheaper. Nobody's saying you should buy it now because it might be more expensive. 0%.
Right.
And hence the problem with the margins and the stock. So are they just making too many Model Ys? The world can't absorb 2 million Model Ys. And I don't think that's the problem. I think if you are in LA and Santa Monica, you'd say there's a Model Y every 4th car. But if you're in Iowa, it is not the case. If you are in Texas, it is not the case. So there are many, many markets that are not saturated with Model Ys. Okay. So why are we having to cut prices? Shouldn't there be demand? Well, because people have no idea that Teslas are cheaper, that they're better, that the charging's great, that the cars drive themselves, that they're the safest car on the road, that they're wonderful for road trips. There's no range anxiety. You get 320 miles on my Model S. 320 miles. You can charge up on a supercharger in 15 minutes now. It's incredible. It's an incredible product. And
time to advertise.
Yeah, people don't know. And this just hubris and assumption that it's like, and then I would argue everybody who knows about Tesla has bought a Tesla. So like, if you know about Teslas, you've bought a Tesla. They've lowered prices. They've made it so attractive to buy a Tesla that if you wanted to buy a Tesla, like everybody in my office has a Tesla now. They all wanted Teslas, but they were too expensive before. But the prices came down and they all bought them, but they all wanted Teslas. Okay. Right. We probably got 15 Teslas at my company. Now we got 2 Rivians. Now we got an i7.
Wow.
So now they got competition. This is something Elon has to accept. The Ioniq, the Beamers, the ID4, the new Prius now. There's a lot of competition. So it's not just like if you want an EV, it's Tesla. Now, if you want a good EV, it's still Tesla. But they're not advertising. Right. People don't know. You know, my business partner's looking at a Lucid. I go, you don't want a Lucid. Like, it's like a disaster on wheels, you know? And he's like, really? And I go, you just don't want a Lucid. Like, and then he found the Beamer, and I go, you're much safer buying a Beamer. The last thing you need is an electric vehicle that nobody can service, which was the Porsche Taycan, which he had. So he gave back the Porsche Taycan because they couldn't service the car. It was always in the shop.
So why is he not buying a Tesla?
Because he hates Tesla.
But does he hate Elon or does he hate Tesla?
Everybody hates Elon at my firm basically now. It's sad.
Really? That seems like a shift.
It's been a shift over many years, but it started a while ago and it's continued. And now a lot of people just hate him. And I get where they're coming from. You know,
is it because of the stuff he tweets or what?
Yes, that's part of it. I'm particularly open-minded to opinions that I don't like, and he has many, and he's supported some pretty horrible people like Ron DeSantis. But that's okay in my mind. Like, I don't have to agree with everything everybody does to be an investor and to respect his brilliance or whatever. But a lot of people in my company don't necessarily agree with that. If they don't like what's being said, they don't like you. And that's how I think a lot of people are. And a lot of people hate Elon now. I mean, I'm sorry. It's just a fact. Now, I was in Orange County and I'm talking to people, and people who used to hate Elon now like Elon. Okay.
Ugh.
So it's not 100% negative. If you're in Orange County, he has more fans there. Okay. But if you're in the rest of California, it's just, people don't like him. I mean, it is what it is. Now, I do think it hurts the brand, what he's doing, but I don't think that if people want a great electric vehicle, they're not going to buy a Tesla because of Elon, because it's still the best electric vehicle. But there's a dissonance that doesn't need to be there. But the reason why Tesla isn't selling cars is not because of Elon. It's because people just don't know. I sold a Tesla to a friend the other day. They had a car accident. They needed a new car. It was totaled. They were getting money for it. And they were like, oh, I might buy this. I go, why would you not buy a Tesla? And they go, they're too expensive. They're not too expensive. Have you looked? And they're like, what do you mean? I go, look at the price. So they look it up and they go, no way. I'm going to buy a Tesla. I go, let me send you the referral code. I got my referral code. I got my points. They bought a Tesla.
I am quite surprised.
They had no idea. They had no idea.
It does seem that way, that if I don't even think most people understand even just how capable autopilot is relative to, we don't even have to talk FSD, but relative to the other technologies, and add in on that the price and the supercharging network, it seems a little nutty.
These are things that should be advertised all day long. Like, like if you put me on a car lot, and buyers were coming by, I could sell Teslas all day long. No problem.
Why don't they have like a marketing officer? I know they've got like 2 people in the marketing department or whatever, but I feel like they need like a bigger role here, like a chief marketing officer to come in and actually like make that the goal of the company. Like let's get the word out.
You hire somebody like from Pepsi, you know what I mean? Like
but I mean, like, do you run a political campaign with no ads? Of course not, because people have to hear your message, Well,
you just brought up such a good point, because you actually did this. You ran for governor. Okay. You're literally trying. And I laughed at you because I was like, Gavin Newsom is like so connected. He's not going anywhere. And, that's the way politics work. But I respected that you wanted to do this, but you had to overcome something. And one of the first things you realized was that the media wouldn't cover you because they didn't want people to know who you were, because they were trying to help Gavin. Right. And then you had to go further and further down the path to get the LA Times to even recognize that you were even running, because they didn't want to give you any name recognition at all, because you're actually pretty well known, And so when you see how hard it is, even though you're pretty well known, to walk around in some city in California, have people know who you are and you're running for governor, you got to run a lot of ads. Okay. And it's just, you can't be in every city. You can't go to every person's house. So how are they going to know anything about you? And you have to educate them. And it's multiple platforms and multiple ways. And I mean, it's a lot of effort, and you and I have built brands. So we know, you have to educate the public about your brand. I mean, that's just, you do a great job of this. And so when you think about a Tesla, where you have the best, easiest car to sell in the whole wide world, and then if I just ran, and we're coming into football season now, okay? Yeah. So I think a good football ad campaign would cost 30 or 40 million. They could save 10 million for 2 Super Bowl spots, and do 30 million spread throughout the season. You pick your core demos in markets, in games where you have, you could do a lot more business in those markets. And then you enlist some of these genius young people making great videos about Tesla, and you make a couple great videos and you test them, and then you look at the results, and then you run these things like prime time, and the Tesla fans will love these things. And then everybody seeing these will be like, wow, I didn't know. And sales will immediately go back up. I have no doubt.
Totally agree. Yeah, I mean, even just the fact that you could advertise the state incentives in the various different states, custom cater ad to the state, and said, look, did you know California's offering you up to $7,500 off on top of federal credits? Did you know Idaho is as well? How many people have Teslas in Idaho, as to your point?
So should we make this clear to the people watching the show that you get $7,500 off from the government and $7,500 off from California if you make, I think, under $300,000 as a family, I think it's 160 as an individual. I'm not sure on those numbers, but
Yeah,
but
and the numbers are
essentially,
different for every state, but you could cater it,
no, but I'm
right?
saying in
So whatever
California
it
right
is.
now, you get
Yeah.
$15,000 on a car that costs, what does it retail now for a Model
39
Y?
or whatever.
Yeah, like 40 grand.
Yeah,
It's like,
yeah.
and it drives itself and it has superchargers. It's like, once again, I think it's the easiest car to sell in the world.
Yeah.
So why aren't we selling? Why do we have to cut margins? So in my mind, you don't cut margins. I would rather have cars sitting on the lot and you defend the margin. But what you teach the consumer is that you're not going to continually lower pricing, because then they have more incentive to buy today than wait for lower prices, because they're not going to come. So unless commodity prices go down further, we're not lowering prices. So if Tesla just said, we're defending the 20% margin and we're not lowering prices any further, and if a couple extra cars are sitting on the lot, then they'll sit on the lot, but we're not giving away cars anymore. I think that would help Tesla stock tremendously, because what happens is analysts like Gary, they model everything. Okay. And so when you model margins at, let's say 22%, you get all these numbers. But when you model margins at 19%, they're completely different numbers. And then you model margins at 18%. So what's happening is they don't know what to model, so they model down and then estimates come down. And so, Tesla's supposed to earn $350 a share or something this year. That's basically what it earned last year or less. Okay. So how does the stock go up? So people go, how does Tesla get back to 400? Exactly. It's like Gordon stock and snack. And I go, Gordon, Tesla was at $400, when I started my fund, and now it's at $220. Okay. So like when you actually think about the decline in Tesla over the period of time that I've had it as my top holding, it's just a 2-year period. But if you actually look at Tesla over the period I've owned Tesla, which goes back to 2014, my cost base is $3 a share.
Yeah.
Now it's 220.
Incredible.
So like you could say, oh, your performance sucks during this one part of the curve, but he missed that it started here. And then the next part of the curve is going to go up again. I don't know when, but it will. But it will only go up if earnings go up. And that's, right, I think, the issue with Tesla today, as it trades at 65 times earnings, that people are like, why isn't it going up? And I go, it trades at 65 times earnings. Like, that's great. Same as NVIDIA. Yeah. People respect and pay Tesla.
I just looked at the numbers here. The EPS last year was 366. This year it's expected to be 338. So you're down 7.6% on. Yeah. So earnings are down 7.6%, and it's trading like a growth company. The next year it's supposed to grow 42%, and then
I've got them for $5 next year, and I think the street's got them at now 450,
481 now,
481. And so that's how you go 50 times the $5, you get 250, and that's where you get Tesla stock. But people say, how does it go to 400? It's got to earn $8. And when's it going to get to $8 in earnings? So now you look down your chart, how many years till it gets to $8 in earnings on those estimates?
Jan 27.
Yeah. So if I tell you it's not going to reach a new all-time high for another, 3-4 years, that might be true. But
so what do you think about this potential for a commodities explosion? This is a big thing that's circulating right now, is this idea that commodities are all going to have this second wave of inflation. Oil's going to skyrocket over $100 a barrel again, and every input cost is going to go up, and that's going to lead everything to inflate again, and then we're screwed. Are we at risk of some kind of commodities explosion?
Once again, I think it's the exact opposite risk. I think the risk is deflation. The risk is demand. The risk is that there's no demand in China for commodities right now. Look at Albemarle. I bought it and I had to sell it because it just went straight down. I had a sell rule, and I was just like, all these commodity stocks have been a disaster. So oil's a little different than the rest of the world, because oil is completely manipulated. So the only reason oil prices went up is because Saudi stopped pumping 1 million barrels a day, because the Russians are pumping as much oil as they possibly can because they're out of money. So it turns out there's plenty of oil in the world. Okay, there's plenty of oil. Venezuela doesn't pump oil at all, and they got tons of good oil. There's plenty of oil in the world. Okay, but oil is a conflict commodity. Everywhere where there's oil, there's war, basically. except the United States. And most countries that sell oil, the big ones, Saudi Arabia, Russia, they're just like bad people, and not the people of the countries, but the governments. And so it's like, essentially oil is like the worst commodity in the world. And so these people need oil. Like the Saudi government paid a higher dividend than they made in profits this quarter because they actually can't lower the dividend because they all live off of it. Okay. So if you think that the Saudis are going to allow oil prices to stay low, they're going to just keep cutting production to keep a price a certain level so they can make their wars and bombs and buy out athletes and PGA tours and murder people and whatever mayhem they feel like causing, including 9/11. So, oil is different and there's plenty of oil. And because technology is hurting the need for oil, I don't see how oil ever goes up a ton again other than war. War is the only way to get oil. Wow. Other commodities in general are economically sensitive. Let's say like copper or steel or whatever. And so the biggest consumer of commodities in raw numbers were emerging markets like China and India and Brazil. And, they were, especially China was like devouring commodities when they were building all the buildings that it turned out nobody lives in. And now it turns out nobody's paying rent on. And now it turns out that they're all bankrupt. And there's actually tons of buildings in the United States with nobody in them that are bankrupt, that nobody wants to admit and have bad debts on them, like all these office buildings across our country that nobody goes to anymore. And so all of a sudden you're like, well, how many new buildings do we need to build in China and the United States right now?
Yeah, I guess not many more office buildings in America and maybe no more homes in China.
If you come to me pitching an office building, I'm going to build an office building, right? You got to be insane. Right. And there's a couple projects they're doing right now that are finishing. They're half done, like here in LA. And I'm like, oh my God. And they're like leased by the anchor tenant. Google is one of them. So Google did this huge project called One West Side. It's on the West Side. They took a mall. This is the worst investment of all time. They took a dead mall and decided to turn it into an office building. This was before the pandemic. So this thing's construction all pandemic. And now it's finished and it's amazing the way they converted this mall into this really cool office building, and there's nobody in it, and Google's supposed to be leasing it. They built it and they don't have employees for it.
Wow.
I don't know what's going to happen.
Oops. So what about this?
I'm not worried about commodities because it's economics, and China's economy is in a recession, and until we actually have rates go down substantially, then that could drive commodity prices higher.
Is there a fear that then, maybe the bear argument is, hey, well, we will experience that deflation? There are two bear arguments, right? One is rates stay higher until something breaks, like you talked about Bank of America. Or the second one is, well, we're going to get a massive amount of deflation and then the Fed starts printing again. And then we go right back to inflation. Is that a real risk that we reanimate inflation after deflation?
Well, if you recall, that was the problem, let's say 10 years ago, post-financial crisis, there was this deflationary pressure on everything as everybody deleveraged. And it was sort of like, how do we get the economy going? And so it was like print money, lower rates, print money, buy bonds, print money, buy bonds, lower rates. And it was like zero. I think there was a point where it was like zero interest rates and the 10-year was at 0.6 or something, So it's basically like, if you have any money, we're not going to pay you anything on it. You will lose if you don't invest it. And that was just to fight deflation, And so there was this deflationary spiral that was going on. It was really going on for some time post-financial crisis, really until Trump became president. And when he cut taxes on corporations and when he was like super pro-business and the economy really picked up under Trump, because Trump was good for the markets and he really fought the Fed about raising rates. If you recall, they were raising rates under Trump, and every time he was like, F you, Powell, F you, Powell. You never did this with Obama. You
wanted to fire him.
Right. And Trump was right, because he's a real estate guy. He's like, I don't need 5% rates when I'm president, and he got him to back off in 2018 the right time, sending Janet Yellen to go have a little talk with him. and 2019 was a great year. And then, when the pandemic hit, we went to 0.00 again on rates to stop, probably the worst, recession or deflationary cycle ever by just throwing everything at it. And then the government kept throwing everything at it for too long until we created this inflationary spike. And it was really trillions and trillions and trillions of dollars of money printing that it took. So it was a tremendous amount of money printing that it took to get this inflationary cycle we had. But it's gone now. So now it's the opposite. So the government is probably going to get shut down at the end of the month because these Republicans can't even agree on a budget. But even if it doesn't get shut down, they're really fighting not to spend more money, which is great for America, and it's great for fighting inflation, because the government creates inflation. The government prints money. And so the bigger our deficits are, the more inflation we have. Now, the deficit's quite big right now. But part of that is because our interest cost has soared. So is this catch-22? We have to pay interest on $31 billion. And so the Fed raises rate, but it also sinks the government. So then the government can't spend as much money. And so once again, the only thing we need to be worried about is falling right back into this deflationary cycle again with an aging population and rates that are too high and people who don't want to work. You know what I'm saying? And then you get this cycle of a dead economy. And then the Fed's got to lower and print and try to do all this stuff to get people excited again. Well, right now we have a very good economy with full employment and wage growth. And if the Fed just backs off and sits tight, this could run for a while and be really good. So maybe there's a little more inflation. Maybe it's 3% instead of 2%. But you get a 3% economy for, next 5 years, and we're all going to make a lot of money in the stock market and in real estate and everything else. But isn't the goal of capitalism is for everybody to make money?
Well, yeah, of course. Grow the pie, right? So what do people do now, though? I mean, there's a lot of depression right now. There are people who are very gun shy on stocks after living through 2022, right, which was basically all year down. Now people started feeling a little happy again because things were going great the first 6 months, and now everything for the last 30 days has been straight down. People can't buy a home. Like you said earlier, it's harder for that sort of white collar professional to get a job right now. You've had layoffs here, and while there's real wage growth, a lot of that seems to be driven by lower wage growth, but those are also folks who aren't necessarily investing. What should somebody do right now? What are you telling people who are coming to you for financial advice and they're in their mid-20s or 30s or 40s and they want to get ahead, but they're depressed by their options right now?
Well, I was just had a meeting before this with a younger guy, 42, who works for a company that was bought out actually by the Saudis. And he made a couple $1 million and it's cash. And it's like, what do I do? I want to do the right things. And I said, this is the best time you could ever ask for if you have cash to be an investor, because anything you do from the safest side to the risky side has a good return. So if you're scared, I'll buy you treasuries and corporate bonds and you'll make 5, 6, 7% with very little, if no risk. It's like the house hack account. We can make 4 or 5%. We don't do anything. We literally do nothing. I go on, I buy some bonds, they mature, I buy some more, rates get better, I buy some more. We've made hundreds of thousands of dollars, okay? Doing nothing, taking no risk, okay? So if you're totally risk averse, I can work with you and we can make way better money than the bank, just going directly to buy the bonds direct. Cut the bank out as the middleman, and the bank has huge levels of risk that people don't understand, okay? Oh, the FDIC. I go, you know what happened to the FDIC in the financial crisis? And they go, no, I don't remember. I was 4. And I go, well, I remember clear as fucking day. It failed. There is no FDIC. Get over it. We're the FDIC. The taxpayers are the FDIC, okay? So let's not pretend. Now, I'd like to see all the banks put in the money to pay off the FDIC for the losses that they took this year, because otherwise we pay for it, as taxpayers. So, if you're a risk taker this is a wonderful time because the market was getting ahead of itself. So when you go back to July, we were all up big, right?
Yep.
Like really big. And now we've all gotten whacked a little bit. Okay. So it's dollar cost averaging. We don't know what the market's going to do. So you add money every month and you take advantage of this volatility. But if you're an aggressive investor, you want the market to go down because you look out to the future and I see the bull market and the end of a rate hiking cycle. And yeah, there's all these risks, but all the Fed has to do is lower rates. That's it. And all these risks just dissipate with 50 basis points of lower rates. So the Fed goes down to 5 or 4 3/4 right now. All those risks dissipate. The economy will have this great, like base earnings could start to rise. And then maybe, we can start bringing down the costs for people so they can buy homes and borrow again, but people can't borrow right now. So it sucks. It just sucks for everybody. And so that would be hugely positive, and a hugely positive outcome. So for investors, this is a great time. If you're looking for financial advice, that's what we do at Gerber Kawasaki. So happy to help you. Send us an email, gerberkawasaki.com. But you need a financial plan. You can't invest in this market without a plan. And that's because you need to understand what and why you're investing to deal with the volatility. So like the guy I just met with, he was looking for financial security and long-term investment. He does some higher risk stuff on his own. So he wanted something to be safer. So we were looking more like a growth and income type portfolio. Okay, great. But it's kind of what he said, well, how long do you want to take to put the money in? And I said, honestly, probably 3 months. Normally I would say 6 to 8, like dollar cost average in. But I'm like, prices just came down pretty nicely. I'd start right now, dollar cost average in the market over the next 3 or 4 months. And I think you'll be in great position as we go into the new year. And there's lots of opportunities once the Fed is done raising rates and we know the path is downward. Then the bond market and the stock market can have some certainty where investors know what rates they're going to pay if they buy a house or they make an investment, or they know that companies aren't going to just get their PEs whacked because rates soar, because that's basically all that's happening right now. Nothing's changed for Microsoft. It's just the PE
compression. What when do you see the first rate cut?
No, that's just throwing crap out in the wind. I hate making predictions because I feel like, and I say this every time people ask me to make predictions, that I know that they'll be wrong. Like predictions are almost always wrong, and that's because we can't tell the future. So one thing I'm sure of as an investor is that I don't try to predict the future. What I try to predict is the now. What's happening? Where do I want my money right now? Like who will benefit greatly in the next stage of the bull market? Like where do I want my money? What are the themes? Well, it's very obvious. It took a couple years, but we know the theme is AI. So the next big technological breakthrough is AI, and it is a real breakthrough, and there is hype and there is real. And so the game is find the real, because that's the theme of the next 7 or 8 years, is how we can take intelligence and mix it with these databases and all this computing power to make things that actually are much more efficient than they are today. Self-driving being the most obvious example of this. Okay.
So favorite stocks right now?
Well, they're the same. Obviously in my fund GK, you can look it up and see what my favorite stocks are any day of the week. From the technology side, NVIDIA, Tesla, Microsoft, Apple, Google are in wonderful positions. Okay. And that's sort of the bigger cap tech side. And then, when you look at sort of the consumer stocks, I really like leisure and entertainment. That's why I like MGM hotels and Las Vegas Sands hotels so much. I want to be in the travel, hotel, gaming industry globally and here in the United States, and in entertainment and sports. I think that trend will continue for some time of travel. So I think the two main themes that are obvious to me right now is people want to go experience things. They want to enjoy and live their lives and get out of the house, and AI from a technology. So the consumer, it's like services over goods, And you saw that with Target's earnings versus MGM's earnings, which were great, even though the stock sold off. And then you have the technology side, you have AI, which really are led by the brains of AI, which are chips. So we just added AMD, not my favorite company, but the only other real good GPU maker besides NVIDIA. NVIDIA is trading at a huge multiple. AMD is expensive, but not at a huge multiple. But everybody's going to end up having to buy AMD chips because they're not getting all the NVIDIA chips that they want. And they're not going to because the demand is just so heavy. So there's lots of ways to play AI that we're involved with in my fund GK and at my firm. And then lots of ways to play the growing consumer and the sort of changing in the consumer, behavior. I actually really like parts of real estate right here, the home builders. I love home builders. Sure enough, Warren Buffett started buying home builders, but I like, a lot of the REITs have been beaten up, VICI properties being one that I own. And I buy a lot of out here with an over 5% growing yield. You own hotels and casinos all throughout the United States, but mostly in Vegas. But if I buy it now with, the treasury so high and the stocks are low and then yields go down, REITs are going to have a great year when rates go down.
Yeah.
Okay. So REITs,
it seems like everything's going to have a great year when rates start coming down.
That's true. But even if rates stay at a certain level and don't go up, everything can do well. But REITs will do exceptionally well if rates come down because they're so interest rate sensitive and they have rising dividends. So even though their dividends have gone up, rates have gone up just as fast, and it's really kept a cap on wonderful things like VICI properties, which, in my mind should be trading at 40. And it's trading at 30 and it pays a 5+% dividend. So for a safer investor, that's very appealing to me. So I think it's a really good time to invest. I think the new themes are pretty clear. I think we have had a horrible Fed. I think I did a show with you 2 years ago and we were talking about the Fed and it was like after the third rate hike, you just duck and hide. And it's always like, and then I was like, geez, I didn't duck and hide even close to enough. You know what I mean? And I wrote this down on a piece of paper and I'm like sticking it on my computer. I will never do this again. It's like
third rate cut, duck and hide. I like
that.
No, all right.
I'm never doing that again. I'm not waiting for the third anymore. Okay.
Okay.
Like my basic new mentality is, and it might be a long time till there's another rate hiking cycle like this, but that the government just doesn't know how to do this right. And you're better off just not playing at all when they start this process because they've just mismanaged it for a long time. And if I would have just sat in cash for the last 2 years, I would have been better off. And so thinking that I can get more conservative and that should be good enough, it's painful. It's worked. It's fine. We've survived, but I'm not doing that again. It's like going over the waterfall. I've done this.
There's a real risk,
and every time it's the same thing.
You think there's a real risk of the Fed leading to some real pain again at one of the big banks, or are you just thinking more regionals?
It's funny because we thought. Not Silicon Valley Bank, but we thought First Republic was a really conservative bank. These were not risk takers. They're conservative guys. They ran a good ship. That was as good a bank as any bank. This is as good a bank as any bank. The fact that they're out of business is shocking to me. It's crazy. Now we're ground zero for First Republic. They were like direct competitors to us on wealth management. We had tons of clients that had accounts there. It's crazy to me. So in my mind, every bank is at risk. Every bank, we don't know. And this is what I learned in the financial crisis. We don't know. They smile, they act like good guys, Jamie Dimon, whoever, but we don't know what's in the black box behind the scenes. The banks don't report numbers like other companies, and they clearly don't have to value assets like other companies. And so we just don't know. And that's, I think, scary in some ways. In the financial crisis, I thought, well, these people have so much incentive to see their institution survive. Like me, like I own my company. There would be nobody hurt worse than me if my company fails. Okay. My clients do, but I would lose all my money. you know? So I have every incentive to see GK survive. Like when things get tough, like during the pandemic, things got tough. It was March, April. I had a friend die right at the beginning of COVID. I was in depression. It sucked. It sucked. It was a hard time for me and my company. And the market was down 35%. And we had clients calling nonstop. It was like 30 days of phone calls straight from our houses, you know, for the first time trying to, I mean, we've always been mobile, but like not forced. And we're all at our houses, you know, like calls all day, down 35%. And, you know, I'm in mode, like I got to survive. Like I got to keep everybody employed. We're going to make it through this no matter what. And, you know, we did. And so you'd think that all these banks think the same way, but what happens is they don't own that much of their banks, these executives. They're not the founders. It's not there. It says Gerber Kawasaki on our door. If we fail, boy, I'm going to have Gordon tweeting every day. Ha ha. You know, but if
that's your motivation to stay in business.
Goes out, you know, those executives don't own any of the bank. You know, they're you know, they probably suck so much money out of these things, you know, so they go, oh, we're going to the next bank. That sucks for us. You know, a guy died 2 months ago. It was kind of ironic. His name was Mozillo. What was his first name? Mozillo was the guy who founded Countrywide. And I'm sure you remember Countrywide. They were the biggest purveyors of garbage loans in the history of man and women.
And guess who bought all those garbage loans? Bank of America.
That's right. And he was the guy who would package up the garbage loans, call them AAA, right? No checking or verifying anything. And when everything went down, he should have been indicted criminally. And because he was like SBF and he paid everybody, he never got indicted criminally, but Countrywide went under, his reputation was destroyed and whatever, but he still made tons of money and lived happily ever after till the other day when he died. And when he died, I was like, dude, this guy was a nightmare for America. Like he just had no ethical basis, but you know, he sold a heck load of loans, bad loans, more than anybody could have imagined, you know? So, you know, we don't know who has
you keep your money. Where do you put your money, man? It doesn't sound like the banks are your favorite place.
My money's in my ETF.
In treasuries.
My money's in my ETF. My money is in treasuries, gold, Bitcoin, real estate. Probably more money than I've ever planned is in real estate, thanks to you, convincing me to redo my house. And
I convinced you to buy, not to
remodel. You sold me on house hacking. And
buying real estate,
buying real estate, fixing it, making it better makes you money. And I believe that too. And so I bought this house. I'm fixing it up. First time I've ever done this. I'm learning.
Tell everyone how much you're spending on the remodel.
I don't want to because it's painful.
That is not what I suggested. I'll save the number.
It's a big number.
You'll get through
it's
it.
Painful. My mom yesterday was like, you know, kind of like, do you need help or whatever? Because nobody's lending, you know, it's not like I'm borrowing the money. And I was like, Mom, you know, if I have to ask you for, it was like during the financial crisis, she came to me and she was like, are you okay? You know? And I was like, well, besides the fire and I've lost all my money, I'm good. Cause I still have like 80 grand left. And she's like, well, if you need help. And I was like, Mom, if I have to ask you for money, that's not a good day for me. You know, like, no, when I was a kid, I was like, I'm never going to rely on my parents. I'm going to always be independent. You know, like a lot of my friends live off their parents and stuff like that, you know, grew up in a certain way and get help, you know, they get lots of help. But I got my parents paid for college. I thought that was the greatest gift you could ever do for me or for a kid is pay for their college because it's super expensive and it's really important. So they paid for my college. I graduated. My dad said, you go to work, you know, goodbye. I'm not giving you another dollar. And I was pretty upset actually at the time, but it was the best thing he could have done. And I went and got a job selling stocks and mutual funds, you know, and it was better than music. And, you know, so yeah. So to think now I'm house hacking. So yeah, I've always avoided real estate and, you know, I've made money in real estate in my life, but I've never enjoyed it. It's always been painful. And
Oh, well,
so my mom was like,
any-
do you need any money? And I was like, yeah. And she's like, how much? And I was like, actually, I'm not going to tell you because I'm not asking you for it. And you would be like, it's bigger than you would want to know, you know?
oh,
And she was just like, all right, that's fine. And I was like, I'm not, I'm good. I'm good.
yeah.
This is all voluntary.
All right.
No,
Wow.
you taught me this, and there's so much truth to this where if you're a really good investor, you want to be diversified. And real estate is a tough investment for most people. It's very tricky and experiential. And if you don't have those experiences, I highly dissuade you from doing it because it's tricky and you can lose a lot of money in real estate. It's a big, and you use leverage. But on the other side of the coin, especially your primary residence is a uniquely good investment because of the advantages you get on a primary residence, the tax advantage, the fact that you actually get to enjoy the house and live there, but also over time, over long periods of time, especially in great areas like where we live here in California, it's just, there's only one way prices go. So it's a really safe investment over time. So I decided, it was Tesla money that, I used Tesla money to buy my house, and I'm using Tesla money to remodel my house. So,
Wow.
thank you, Tesla.
Well, the funny thing about California is because of the policies and this Democratic supermajority that doesn't want to make it easier to build more
Right.
homes, your government is actually a hedge to basically guarantee that prices will only go
Right.
up in California. Obviously, there'll be corrections at some point in the future, but they're like some form of an insurance policy because they keep housing supply so low
Right.
because they make it so hard to build.
The way I look at it is you don't actually buy a house when you buy a house in California. You buy three things. You buy land, you buy a building, and you buy a membership fee. And that membership fee is to live in California. And that's part of the price, whether you like it or not. And so you go, oh my God, California is so expensive to live here. And I said, well, you're paying the membership fee too. It's not just the house. And they're like, what do you mean the membership fee? And I said, go outside right now. It's the best place in the world you could possibly be right now. Like this rental house I have is in Malibu, and it feels like Hawaii right now. It's just so beautiful. We have moisture in there. It's probably the same by your house up in Ventura. Like it's just perfect out right now. It's just beautiful. And like I looked at Austin, it's 102 with excessive heat warning. And everyone's like, come move to Austin. I'm like, screw that. It sucks in Austin. Come to California. I'll see you at the beach. And sure enough, you go to the beach right now, it's Texas license plates everywhere. All over. They go more to Orange County than they do the, woke Will Rogers Beach here in Santa Monica. But boy, in Orange County, it's like mini Texas. It's so funny because they go like Austin's like the California of Texas. And I was like, Orange County is like the Texas of California, And so anybody with money who lives in Texas is actually not in Texas. Just a little hint, they're all here. So I'm proposing that we start a new California tax for people who live in Texas and Florida, that if they come to California, they have to pay a membership fee because we all pay the membership fee. And then they make fun of us and say that it sucks here. And then they want to spend all their time here. And I think they should have to pay the membership fee too. So if you make over $500,000 a year and you want to come to California on a vacation, you have to pay a $10,000 fee. It should just be that way. Sorry, you can't just use our state. It's,
Hey, you should run for
expensive.
governor.
It's expensive. We got lots of things to pay for here.
When are you running for office?
I'm going to run for governor. I'd only run for governor as your lieutenant governor. You could be the governor. I'll be the lieutenant governor. Lieutenant governor does nothing. It's literally the best job in government. I'm a lieutenant governor, and then you literally have no job. Government's great.
Wow.
If you want to not do stuff quickly, it's like opposite. Like you're in the back of like some car making YouTube videos now. And I was watching this video, like, are you going like 80 miles per hour in this car doing a YouTube video? And I was like, you're driving. What are you, like one of these like politicians where they have to drive super fast, like the Ecuadorian politicians, so you don't get shot? Maybe that's too soon, but yeah, it's not easy. People think politics in America is tough. Try Ecuador.
Yeah. Yeah, no kidding. No kidding.
Seriously.
So what did I miss, Ross? What are we missing here? Is everyone going to be okay?
Come on. We've been doing this a long time. Now, I think we've been doing shows together for about 2-3 years. Okay. We've been through some really hard times. Okay. Real life. The pandemic sucked. It was a really hard time. You know, I had friends die. You know, the last year of my life has been the most fun I've had in 3 or 4 years. It's been wonderful. Even this summer, hanging out with people at a party and nobody even thinking about COVID, even mentioning it, and just living our lives again. I went to Universal Studios with my kids and went on all the rides and the packed people and nobody thinking about masks and COVID. It's a dream come true. Like, we forget how shitty it was. And now we've had to make all these big adjustments and machinations in our economy to this huge shock that we had. And it's still kind of working itself out. Okay. Yeah. But the next stage is really good if we do this right, because past that, we've got some of the biggest enemies of our country are in trouble right now, which is Russia. Russia's done. I mean, they've destroyed their country in this war with Ukraine. And China, under Xi, has made a huge miscalculation, becoming more authoritarian and then siding with Russia, thinking that them two together could be a counterbalance to the West, but then miscalculating Putin's stupidity. And then now their partner's devastated and destroyed, and she's totally killed relationships with the United States and the Chinese business community. He put Jack Ma in jail. He put all these people in jail that were the richest people in China who got any power because they were billionaires. He shut down those businesses in China. So all those tech companies and all the Tencent and all these companies that were like really doing well, like, she was like, you're too powerful. And in doing this, he's really hurt China. And, you know, I read that China youth unemployment super high. And then yesterday they announced like they're not going to report these numbers anymore.
Yep.
And there's no greater foresight for social unrest than high youth unemployment. Okay. Yeah. Kids without jobs leads to social unrest. Then their property companies are not paying on their loans now. And yesterday there was social unrest in a few towns where people went to get their payments from, and they wouldn't pay. And now this is the biggest like investment product company it's like the vanguard of China. And people put, I think it's $150 billion into this company for income. And all these loans are
the shadow bank.
Yeah. And they're all bad. All the loans are bad. And they just stopped paying. And now they're outside, you know, yelling and screaming, and it's social unrest. The next stage in China is social unrest, because
they crack down fast over there. I mean, I think they run out with the police instantly.
Right. You saw with COVID how quickly that can change against them, and how quickly they changed their policies when they realized that there were so many people that were unhappy, that even with this huge military apparatus, you know, if you lose them, then the whole country changes. So
I was
China's
reading
in trouble.
This morning that the police are proactively calling investors or depositors in that shadow bank that you're talking about, telling them not to protest and intimidating not to protest. So proactively, imagine being called here. Oh, and hey, you're in Silicon Valley Bank. You better not go outside the bank and protest. This is the police, something to that effect.
Welcome to
That's
China.
Crazy to me.
Isn't it like Brave New World? China's like scarily like military police state. Now it is Brave New World. Like, so like Chinese people, you know, it's really interesting because, you know, I have relatives who are Chinese and, you know, and live in China, and some that
you have relatives everywhere.
Well, my dad's wife is Chinese, and you know,
and then we talk about Ukraine, and you say you're Ukrainian.
Well, that's my real family. My dad's divorced, and he remarried a Chinese woman, and I have a Chinese stepbrother, And I've learned a lot about China over the years, but they have relatives there and they have their views and their insights. And when you spend time like trying to understand Chinese culture, Americans have very different culture than Chinese people. It's just day and night, and we don't really understand their culture very well. And we certainly don't handle it right. Our government doesn't, but Chinese people are not dumb people. They have big egos that are focused around success in business and trading. They've been successful as business people and traders for generations and generations. And the last thing they need is their country being mired in an economic slump. China should be the wealthiest, most successful country in the world if it was managed right. And she had it on the right track, but now it's just completely off the track. And I just don't see the people sitting around forever becoming a third world country again. Like there was this whole real belief that China was going to become the leading economy in the world. And now there's no chance, not with the way it's being run now. So I think this is great for America. These are great things for America. Russia isn't going to win the Ukraine war. I don't know how it ends, but they're not going to win. And whatever's left of Russia when this is over, they have no money. They have no trading partners. They're in real trouble. I mean, maybe Putin even falls. Only risk being we get a worse person, but maybe we don't. But that said, the next 5 years could be wonderful for our country if we make the right decisions in our election next year, or have better choices. I would like to see better choices for both parties. But economically, we're in a great position. Globally,
no recession, you're saying?
We're not in a recession now, right? We started the show talking about 5 and 6% GDP, which I think is a little bit overdone, but nobody's talking about negative GDP, right?
Yeah.
And I think none of us, and me included, I don't think I have any like better predictive power than the tons of economists and many which I, support that have given me information that hasn't been quite accurate, not because they meant it to be, but it's just, the economy is way better than anybody thought. And we can all talk about why, but it just is. And so what's going to happen over the next 5 months in the United States? Well, do you see consumers making drastic shifts in their spending habits? And I just don't see that because unemployment is still 3.5%. So until unemployment goes to 4, until we really see unemployment go up, we're just not going to see a change in consumer behavior. People are going to go have a nice Halloween. They're planning their Christmas vacations, their holidays right now. People are still on vacations from the summer. Europe's so busy, they don't know what to do, So these higher rates will slow the economy, especially housing and cars and the thing. But in general, until we see unemployment really tick up, I'm not worried about the economy. And if we see unemployment tick up, that's actually good news to some degree because we don't want it to get any hotter. Okay. But I just don't see it getting hotter than it is right now.
Got it. Okay. So last question I have for you, and then of course you're welcome to add anything, is what about Hurricane Hillary coming right towards California? I thought you said we have a membership fee here and we're supposed to have the best weather ever.
Right. So how is this hurricane?
And why is it Hillary? Why couldn't it be like Trump? That'd be hilarious.
Hurricane Trump. We had Hurricane Trump, right? We had Hurricane Trump for a couple of years, 4 years. Ended on January 6th. If you remember, it was quite a lot of damage, a little bit of damage. Hurricane Hillary, Hillary gave my commencement address at Penn in 93 when I graduated. And it was the most boring thing I ever heard. And I was really sad that I graduated college, almost died doing it. And I got Hillary, so now we got Hillary again. Anybody who wants to be in denial about global climate change, it's just, you're in denial because we've seen weather patterns shift dramatically all across the world. And what we just saw in Maui, shout out to all of my friends and people in Hawaii and Maui that are suffering right now. And it's really hit close to home. I spent a lot of time as a child in Lahaina and I'm still in shock that it's gone. And I was like, I tweeted something about like climate has really created more extremes. And then all these people are like, it's not climate. It's not climate. And I'm like, look, it's the hottest July in the history of man and women. And we got hurricane season around the corner, and who knows what's going to happen there. And now there's some sort of hurricane coming to LA. I was like, what's next? You know, I don't know what to do. I have all my stuff outside. You know, is it going to rain? You know, I moved my whole gym outside. I don't work out inside. I moved it all outside, and it's great.
Yeah,
it's great.
You'd have to move
until
that in on
hurricane
Tuesday.
What?
You'd have to cover that
I
all
know.
up Monday
Well,
night.
it's my wife's birthday. This might be correlated. So it's my wife's birthday. No, I'm not saying that in a bad way. You know, I'm not saying it's a negative correlation. So you're really having 2 more kids?
With twins and then potentially some more, but that's
but you have 2 kids right now, right?
Yeah, I have 2 now, and then they're twins on the way, and then
when are they due?
There might be some others on the way, but that's for a different video.
So are you trying to be like Elon? Is this a philosophical thing? I think we talked about this one. You wanted to have 8 kids or something. So is it like you're starting your own village, or is this like an ego thing?
I love children. That's it. They can provide.
You love children, yet you're in finance, and you know you do all these serious things.
Oh, yeah.
Why not start a school?
Yeah, I love them. We should.
Yeah, I don't love children obviously as much as you. So you're going to go to 4 kids, and you might go to 6, is what you're saying?
Or more, yeah.
That's good. That's good. You know what? You're young, and you'll need something to keep you busy all these years since you got married.
I'll tell you after the stream. Which, with that, any final things that you want to say?
Well, thanks for having me, and I do appreciate your show. And whether you're doing it in the back of an 80-mile-per-hour vehicle, or in your plane, or in your studio, you know, I'm impressed in how far you've come over the last 3 years, and your content and quality of your content and your knowledge has grown tremendously over the last 3 years. So I appreciate what you do. I think there's a lot of people who follow you, and you provide good information, which has become harder and harder to get, I think, in the last couple of years. So I appreciate what you do. That's why I like coming on your show. I love your audience. The audience is great. You know, I'm here to try to help people. I think about this a lot. You know, my job is not to get, you know, I got to beat the S&P and I got to do it. My job is to help people build their financial plans, to build their futures. We do perfectly fine in the markets over time. That's not the issue. It's about making good financial decisions, starting 529s for your 7 kids. It's about having your IRA and your 401k invested correctly, making sure that you're taking advantage of all the tax consequences, positive, that you can reduce your taxes. You know, we have an accounting firm now at GK. Our GK accounting firm has done incredibly well. For our clients, it's growing crazy. It turns out everybody wanted a better accountant than they had. It's about life insurance. We do life insurance. A lot of people don't realize how important it is to protect your family. Stuff does happen. You know, it's something we do. So I think there's a lot that you can do to get ahead right now. If you're a young person or a couple and you really want to get ahead, this is really a great time. And when you started with that question, you know, it was sort of like, well, what should I be doing now? And what you really should be doing right now is building and focused on your overall financial plan and what those goals are, and considering employing somebody like myself or my firm, Gerber Kawasaki, to help you implement your financial plans, because this is a great time. And what I think, I said this at the beginning of the decade, I thought it was going to be the roaring 20s again. And then the pandemic came and everybody was like, you're wrong, you know, and then interest rates soared and they're like, you're wrong. And I'm like, no, this is just setting it up. We've got, 7 more years. It's kind of what I tell the people in my ETF too. It's like, just give me the 7 more years. Okay. I started off on the worst year. My second year was okay. My third year started pretty good till this month. And you're just like, give me 7 more years. Like when we look back 10 years, I think it'll be a really good period for investors, So I think this decade, could be a lot of wealth creation, and if young people are smart, build good financial plans, this is a great time to get ahead for people. The U.S. economy and the overall country, I think, could be in a great place. And I think probably the most important thing we do on the short term is end the Trump era. Error. The best thing the Republicans can do is to run a real candidate that can win.
Like Vivek.
Vivek is not a great candidate. You, I think, exposed, and now others have exposed his background, which is somewhat troubling, just like RFK. This guy is not fit for office. I think there's plenty of legitimate politicians that can run for office that would be great, including your friend Gavin Newsom. You've got Chris Christie. Chris Christie is a perfectly good Republican. I like Chris Christie. A lot of people would vote for this guy if he ran. He's actually a good guy. You know what I mean? And he's not the prettiest guy. He's not the sharpest guy, but he's a good guy and he wants to do well. He's a traditional Republican. Okay. Now he's starting to take the lead over DeSantis because DeSantis is just horrible. So it's we have this opportunity. We need a young Democrat. We need a young Republican. I don't really care who wins. I just want new people, and I want somebody young, and I want some energy, and I don't want extremism. And I'm sure of this. I'm sure that America doesn't want extremism. So we see the extremism on the media, but people in America want stability right now. And that was what gives Biden the advantage with Trump running. So the sooner we can get past the Trump era, the better this country will be. I'm not saying I want a Democrat to win. I actually don't. I actually want the Republicans to run somebody worth voting for, but not somebody who tried to overthrow our government and who is a criminal. So, I think this country has the opportunity. Alleged criminal. He is innocent until proven guilty of his 4 separate indictments for, tens of charges. He is innocent until proven guilty. And I do believe in our system. And I think he shall be held accountable. And if he turns out to be innocent, then that's great. And if he's guilty, he's guilty. But to pretend that he's above the law is, I think, stupid. And so
they should publicize these trials.
They are. I think the Georgia trial will have cameras.
Good.
Supposedly.
Good.
I once again, I think the smartest thing the Republicans can do is move on and find a great candidate that they can all get behind and really push, because I think there's a lot of people, including Democrats, that want to vote for somebody other than Biden.
Like Hunter.
Well, Hunter is like the worst human alive. Hunter is such a bad guy. It's crazy that he was actually birthed by Joe, because Joe's like a good guy. And it's what the hell happened with Hunter? This guy's the worst. I mean, it's the worst. How he's not in jail is a miracle to me. So I am definitely in the camp that Hunter should probably go to jail, but I don't think that has anything to do with Joe. I mean, sucks. It's his kid. I don't think Joe Biden's making all this extra money. I don't know if you've seen Joe Biden's house. He's not pocketing millions. Let me tell you that.
Wow. So how do people get in touch with you and your firm?
Well, the easiest way is gerberkawasaki.com. You can send us an email, info@gerberkawasaki. You can follow us on Twitter @gerberkawasaki. You can buy our ETF, GK, on the New York Stock Exchange. You want to invest directly and you're with Robinhood or want to Schwab. A really interesting portfolio would be SPY, GK, and PP. Because PP is high octane. It's like a shot of adrenaline, and then we're the growth portfolio. And then you got the S&P for the overall market. There you go. You got it all. Probably heavy in Tesla, but that's not so bad, right? Are you trimming back your Tesla, or what are you thinking about Tesla?
No, I think this is a reasonable retracement after the AI nonsense. I expected this year to be pretty volatile, but positive. And it hasn't been volatile. It's been straight up all year. It's
Still
the
now.
secret. It's been straight up.
Right.
Who cares? Some give back. I get to buy some more lower.
Right.
This inflation's go. I could go on forever. I think all this bear stuff is nonsense. I still have not gotten. I beg every single day for people to send me bearish charts and news. Email it to me, Kevin@meetkevin.com. I make a video and I break it down. And I'm like, this is not only not bearish, it's actually bullish. So I'm sorry. I try my best, but I'm sorry.
You can't get a bear argument out of anybody.
It's not a good one.
Well, you see a lot of things also because you've been traveling a lot. And so you're in a lot of different towns. So you have I think a broader view of the economy than I do, because I'm usually in big cities or, sort of like looking at certain data points. And it's harder for me to grasp, although those cities often have less economic force, but
Right.
the overall vibe of America. But that said, I agree with you. I think this is a really great opportunity right now. And I haven't seen any reason to be bearish other than the 10-year just going up incessantly,
Yeah, but I mean, that's all because of the Fed's fugazi of talk, which they have to do this so they don't disanchor inflation
Right.
expectations. So they're
Right.
playing the game.
Right. They talk up
So,
rates, but 4.3 gets to be a little bit troubling, because then you're starting to be like, well, something might break up here,
yeah, true.
and that,
But you know what? Let it break, because
Right.
the sooner something breaks, the sooner the Fed cuts 2% on a Sunday again.
Right. And as long as it's not the bank where you have all your money in, then that's fine. Right.
That's a good one to end it on. Ross,
Right.
hang tight.
It happened to my
I'll tell you about
grandma,
this baby thing.
It happened to my grandma.
Yeah. So hang tight. I'll tell you about this baby thing. Everybody else, thank you so much for watching. Feel free to share the video if you found it helpful. Check out, I put Gerber Kawasaki in the description down below, or you can just Google it, Ross GK, Gerber Kawasaki. Check them out. Check out their ETF at ticker GK, and we'll see you all in the next one. Thanks so much.
Yeah. Thanks for